Hello, welcome to another Register Kettle, your chance to hear about the news from the people that actually write it. Now, it's been a good financials week with many tech companies throwing out their figures to show exactly what they've been doing over the last 3 months. But it kicked off on an early problematic start, as you'd say, with Nvidia's shares dropping massively last Friday after financials weren't that good. Now, we've seen a lot of talk about how AI is going to drive profits for large companies, but the costs are also huge as well. I know there's also some Tesla news that you want to get onto, Brandon, but in the meantime, with the Tobias, with the Nvidia thing, what actually caused that?
Right. This is indicative of just how jumpy everyone is and how we've kind of moved past the honeymoon phase of a lot of this AI investment. And investors are starting to get a little nervous about the fact that there isn't a clear return on investment. And, even if it's not short term, they would like to know that when is it coming, and create some kind of bar in terms of measuring it. And so this Nvidia drop caught a lot of us off guard on Friday because we couldn't figure out what was going on. Well, it turns out it was all tied back to what Supermicro hadn't said. Traditionally, the Supermicro, big producer of GPU servers using Nvidia components, has released preliminary financials ahead of the kind of full release of information. And the thing about investors and financial analysts is they like consistency. And when companies do something different, they get nervous. And so because Supermicro didn't release their preliminary earnings results, everybody freaked out and a bunch of chip stocks plummeted. Most notably Nvidia's, because that's who everyone is paying attention to right now.
And I've seen a massive increase in its stock price already this year. So this is the problem. Everyone's nervous about AI. The costs are huge. The potential benefits are huge. But has that actually played out in the financials so far this week?
Yeah, so this has been kind of a roller coaster in that, because on Wednesday, Meta released its financials, and as Richard Speed, I think, put it very clearly, he said the quiet part out loud, which is it's going to take years to drive a profit from Meta's AI division, which is not what investors wanted to hear when they're spending tens of billions of dollars on infrastructure.
This sounds so weird. I feel like we just heard this out of Zuckerberg a couple of years ago. It's going to take years to for our big investment to pay off here. Except I think it was with a little bit of a different technology. Maybe you guys remember it, the metaverse.
The one's mentioning at the moment, the verse,
right.
As it were.
Yeah. I mean, a few years ago, right? He was defending losing millions and millions of dollars on that whole thing.
No, billions. I mean, if you look at the financials,
billions. That's right. Yeah,
they're still burning through billions on this failed project, and I cannot understand why they're doing it. But I mean, returning to the AI front, as you're right, he said the quiet part out loud. It's enormously expensive. It's going to take time to work. But at the same time, you've got Google, Intel, and others saying, "Oh no, it's driving profits already." How believable is that?
Well, I think I was looking at this, and Tom Claiborne, who wrote up the coverage of Microsoft and Google last night, pointed this out that they're spending also an incredible amount of money on infrastructure in order to support these goals. I think the thing that's a little bit different with Google is that they are so large that even a 1% or a 2% improvement in efficiency in their workflows is worthwhile doing. And which makes sense because they've already plowed billions of dollars into custom chip development and for their clouds. Google in particular, but Microsoft has recently joined that party, where it's all about beating out the competition, even just slightly, having slightly lower prices or having slightly better margins is at that scale makes a huge difference. And I think that puts companies like Microsoft and Google in a better position for this because they have the scale to kind of eke out those gains in the early period of time.
Yeah, it shouldn't just be. Sorry, you shouldn't. Yeah, I was going to say it shouldn't. We shouldn't just look at the gains made by people like the hyperscalers. I mean, I'm thinking that okay, great. Google had a fantastic quarter. Microsoft had a fantastic quarter. But what does that mean for customers? Do customers also have a great quarter? They got charged more, they paid more, they bought more because revenue is up, and profit is up. So customers were paying more or buying more. Well, then what did that mean for them? Did they actually see when do customers get to see the productivity gains? Do they get to see it straight away? I mean, it just, to me, it just appears that we really are in that era where there's a gold rush, and if you're the ones making the shovels, you're the one that's winning. Is anyone actually hitting gold right now?
Yeah,
right now. So I think that's the key thing, and I think that's going to be, and I don't know where we go from that, because if you have got a Microsoft 365 deployment and you've bought into Copilot and you start shelling out money for it, at what point do you 12 months down the line say, like, this Copilot's not worth it, we're going to cancel it? Or do you just basically is it by that point internalized in IT cost? And so everybody's now got Copilot, and it's seen as an option, and it's not seen as an optional extra. It becomes the thing that you pay for all the time. I just wonder when customers are going to start reaping the benefits from all this AI that Google and Microsoft are making billions on, or seem to be making billions on.
I mean, I was shocked last night because I did a quick check to see whether or not Microsoft and Google had followed Meta and seen massive plummeting of share price or not. And in fact, in after hours trading, their stock prices were way up.
Okay. In all fairness, Google did spend $70 billion buying its own stock back, which is going to give you a big bump.
It does. You can certainly buy over or win back investor favor by buying back your own stock or giving out a big dividend.
Is the Chinese military parade of red flags, though. $70 billion buying your own stock back.
It kind of says something. It says something about what we were saying earlier about people being very nervous about the fact that, like, maybe just Google anticipated this. They thought, man, Q1's not going to impress. Although it should, but you know what the stock market's like. So they might not say the word AI enough. So Google's like, well, quick, we'll do like a share buyback like program that'll make everybody love us. In the end, all they had to do probably was just simply say what the CFO said, which is like, yeah, there's a contribution from AI to our revenue, and our revenue is up, like something like depending on which segment you look at. I also was interested in linking it to see like what is the inflationary increase in the industry overall for online services, cloud services, software as a service. And if it's sort of like, you know, the industry average inflation is like around about 10%, and it turned out like, I don't know, Google Cloud's revenue increase was about 10%, you know, you start to think, I'm not picking on Google Cloud here, it's just that they happen to have, you know, their financials this quarter, this week even. But it's the fact that, like, you know, it's how much of inflation is being driven by these big tech players increasing their prices in the way that they have, or charging extra for things, or pushing extra add-ons. Because at the moment, the thing right now is to sell AI as an add-on, right? It's like you already buy the thing that you want, and now AI is seen as like the enhancement on top. It's kind of like
$10 or $6 per person.
It's like cloud premium. It's like cloud premium. It's basically what it's going to turn into at this rate, in my opinion.
But does it actually work? That's the thing. And is it worth the money?
Well, it's not everybody's prices are going up right now. Tesla just slashed the cost of its whole self-driving functionality to what, $8,000? I'm not sure that makes it more palatable or not, but
also apparently declared that it's not a car company. Brandon, I know you've been following this closely. Can you fill us in?
Yeah, right. So Tesla's
God, that's a heavy sigh, right?
Well, right. I mean, you can read my opinion piece that I published this week on this whole situation. You know, I have my opinions on what's going on at Tesla, but I mean, it's I don't know. I feel like this is always the case with an opinion, right? You always feel like, well, it makes sense. It's true. It's reality, right? And I feel like, yeah, sure. I have some opinions on Tesla, but like, there's performance expectations and there's reality, right? And they seem to be like, the numbers or the reality of the situation seems to reflect my opinion on the Tesla right now, right? I'm a bit bearish, to put it lightly. But I mean, like, they've had a horrible Q1, right? They didn't have a good first quarter. They had 9% year-over-year drop in sales. Net profits down 55%. Productivity or production numbers are down both year-over-year and also from last quarter to now. And so are deliveries. Shares are down around 30% year to date, right? They just laid off 10% of the company. And at the same time, right? You think you go into this kind of call and you would expect nothing but doom and gloom, maybe some shares stagnating a bit more.
That's not how it works.
But not with Elon Musk. No, especially not,
Oh,
right?
no.
Because yeah, I mean, especially with Elon Musk, that was my whole thing. I was like, what's he going to say now, right? And like I wrote my story, he seems to have a real penchant for the second there's trouble, just tossing out an idea, seeing if it sticks. And I mean, I'm sure there's planning for this, right?
Putting a dead cat on the table. Once you put that down, everyone talks about that rather than the actual problems you're in.
Well, it'd be very much a live cat or a robot cat in the case of an AI self-driving robot cat. I like the line
well, in this case, it's many things, right? Like it's basically hitting everything he can. But like Tesla is now an automation company, right? Which includes AI in that assumption, right? So Tesla's an automation company. Basically, he's back. It's like Elon's greatest hits. He's replaying the robotaxi thing from 2019, right?
I like what you said. I like what you said when in the previous time he promised an autonomous robot and it was just a guy in a suit. And you were like, well, when these cyber cabs turn up, is it just going to be a guy in a car costume?
Right. Like, I mean, what are we expecting to see, right? Like, but like still, right? He says these things. He says we're going to have 10 million or more cyber cabs with privately owned Teslas. Cause don't forget about this old stinker, right? Like we're going to get back to, you sign out your Tesla for this, robotaxi network. So by the end of the decade,
most Tesla owners I know would be perfectly happy allowing complete strangers in there to do what they like while it's being driven around.
Yeah. Everybody loves walking out to the car in the morning to find it just trashed. I mean,
trashed.
Covered in cigarette butts, used condoms and whatever. But vomit. I mean, who knows, right? But like, then on top of that, he wants to, if it's not robotaxiing and it's not being driven by you, well, then we can also use the compute power on this massive distributed AWS competitor, right? That's going to use Tesla. So basically, you're going to come out in the morning, it's going to be covered in vomit, and the battery's at 0 because Elon Musk's AI project has drained the battery on your Tesla. And it's like, but these are all exciting things to investors, right? And so you toss these out there, and all of a sudden the stocks shoot back up. I mean, they're up. I think, like I said, they're down 31% year over year, but this week they're up 30% from where they were the previous week, right? And that's largely based on this pre or post earnings rally that they've had for some inexplicable reason.
It's kind of like cryptocurrency, isn't it? Everyone kind of makes fun of cryptocurrency for not having inherent value and it's all speculative, etc. And it's like, well, explain Tesla shares then. Right, explain that. And also, I mean, I don't want to pick on Elon too much, if that's even possible. But there's other shares like that. There are other tech companies where you look at a price and you realize people are buying this because people are buying it. And because people are buying it, more people buy it. And because more people are buying it, more people buy it. And as soon as something happens, going back right to the start, as soon as there's like a little slight wobble, someone will sell. Other people will be like, oh, is this it? We're selling now. And then down it will go again. It's
and then someone comes out and throws that shiny lure at you, that puts that dead cat on the table. And the investors are like, ooh, wait, we might not want to give up yet. Elon's got this robotaxi thing. So like, I'm really kind of curious to see come August, right? What's going to happen?
Do you know, knowing Elon, and I don't know him personally, obviously, but knowing Elon, his total obsession with San Francisco, he probably looked around and got really jealous of Waymo and was like, well, I can do that. And was like, is it so hard?
Waymo had their car trashed and burnt at the Chinese New Year celebrations.
Yes.
A lot of Tesla owners aren't going to like that. I mean, just to wrap up then, I mean, do financials really matter at that point? And what do they tell us about AI? Or is it all just smoke and mirrors at this point?
I think that it's right not to focus too much on financials. We report on financials because we want to give people an idea of the health of the companies that they are buying into, and also to give people an idea of where other people are spending their money. But I think it's all well and good, Google and Microsoft and others saying that their revenue is up. But ultimately, when they say revenue is up, that means that more people are paying them for things. And you want to see the return on people want to see the return on their investment, not so much Microsoft's.
That's the really important point. Yes. I mean, it's all the costs are massive, the potential payouts are huge, but it's just about getting people to pay, surely.
Well, they are. I mean, that's the thing, right? They are. I mean, you only have to look at like online discussions and to see system administrators and IT department heads being told, let's try out Copilot. Let's give it to 4 people, and then 8, and then 12. Let's give it to that whole sales team. Let's give it to the marketing team. Wait, why do we have a marketing team? You know, these are the sorts of discussions that I think lots of companies are having. And
I think there's a lot of FOMO, right? There's a lot of uncertainty in the market, and everybody at every level is going, well, I don't know that there is going to be a payoff here, but I don't want to be the person who didn't take the risk and now is irrelevant.
And that's what all the marketing is, right? When you're listening to the radio, when you hear an ad for some cloud company or whatever, it's always like, you know, you got to take a move on AI now, because if you don't, your competitors are. That's like everyone's, you know. But again, right? Like, what value does this add? Well, it doesn't matter, because if you don't do it, you know.
Yeah. On the other hand, is that a viable business plan? I think we're going to see how this plays out, certainly in the second half of this year and the first half of next. So, well, thank you very much for joining us. And it's going to be an interesting 12 months on the AI front. I suspect an awful lot of fortune is going to be made and lost. So thank you for joining us on The Kettle. We'll be back next week. And in the meantime, you can listen to this on your favorite podcast stations as well. Have a good day.